Hello, fellow Amunites and all the citizens of the cryptosphere. My name is Crian, one of the community managers here at Amun, and we are back with another episode. This time, diving into the DMX token. No, not that guy. It's one of the tokens we offer here at Amun. Welcome to the fourth episode of the Inside Crypto podcast. This episode was recorded on August 18th, 2021. Today we are joined by Adrian Fritz as well as Dr.Roland Gemayel. He is, as James put it, the methodologist behind the DMX token. So, what is DMX? Now that you know it's not the musician, how is it different from DFI? Why is it such a unique product? These are some of the questions we are going to get into on today's episode. Let me tell you, you don't want to miss this episode. It is filled with all the awesome technical details that will change the way you look at crypto, the cryptosphere, exchanges, pretty much everything. We also have the latest breaking news at the end of the show covering Ethereum, Fidelity, and insurance-related crypto companies. Thanks again, everyone, for listening, and don't forget to tune in next week when we interview another member of the team where we get their insights into everything that is going on in the crypto world. Hi there, all you crypto enthusiasts. It's Crian, and I am back with another episode where you get to meet another member of the team. We dive more into the way our DMX tokens work today, and hopefully we get to talk about the latest news. As always, these things are time dependent, but today I would like to introduce you to Dr.Roland Gemayel and Adrian Fritz, one of the newest members of our research team. As a special bonus, Adrian will be co-hosting the podcast today with me. I'm so excited. He'll be asking all the hard-hitting questions that someone who has all the knowledge can ask. So let's start off with some softballs. Roland, why don't you tell us a little bit about yourself?
Thanks for having me, Crian. Hi, Adrian. Hi, everyone. A little bit about me. So I've been in the crypto industry for the past 5 years. I've worked with a couple of crypto exchanges, one of which is Binance, where I was exposed to a lot of industry changing movements, one of which is like margin trading, futures trading, as well as the lending business. I was involved in the creation of these platforms, which are now being used by millions, if not hundreds of millions of users worldwide. Currently at Amun, I also worked on some interesting projects. I've worked on the DeFi tokens, which we will be talking about today, one of which is the DMX token. Yeah, it's been a journey.
Wonderful. Thank you for that intro. Adrian, what about yourself?
Hi guys, my name is Adrian. I'm the newest addition to the team, specifically the crypto research team. My background is more coming from investment banking and consulting. I always had a huge passion for cryptocurrencies. Been in the game for a couple of years, did some bull and bear markets, and finally made my passion, my profession, and now I'm full-time crypto supporting the research with Amun talk. So thanks a lot for having me.
Thank you both for being here. I'm so lucky to have like two rarely experienced people on, and we're going to continue the role of the way the podcast is going, talking about interesting things. So moving on from the introductions. So Roland, in our first episode, James gave us an explanation of DFI, which is one of the tokens that Amun offers. And he introduced the company. I mean, towards the end of that show, he mentioned you. We couldn't get you on until today. Thank you for making time for that. James used the term methodologist for DMX. Do you want to give us a breakdown? Why did James call you the methodologist, and how does DMX work? You know, maybe a brief sort of introduction before Adrian asks you some really interesting questions.
Yeah, sure. So in general, the like in the traditional financial markets, as well as the product that we have, the DFI product, that's based on market cap. So many of the ETF, ETP products that you see in the market are based on either an equal weighted capitalization or a market capitalization. So we've started thinking of some innovative ways of introducing new products that allow investors to benefit from momentum in the market. And this was extremely important when the market was trending upwards during that past year. So we looked into multiple indicators that would capture momentum. And after doing some rigorous backtesting, we ended up on a set of rules which constitute the DMX, and that basically turned into a methodology in itself. So I guess that's where James got that word from. And yeah, based on that methodology, we came up with a new product, and which we will just be discussing now. And it basically set up a framework for future products to be introduced as well.
Nice. Very nice. Thanks. That's a very easy to understand introduction. I'm sure people who are listening to the podcast, or if you're watching the video, you'll be able to see I have some pictures taken from the Amun website, which explains just what Roland talked about, maybe with a little bit more details as well. So if you're not sure, if you want some extra explanation, go to the website. But now we're off to Adrian. Adrian, why don't you ask the first question?
All right. I guess the first question would be, what kind of assets qualify to be included in the DMX token, and how does it compare to the DFI token? So what are the major differences?
So several things, several criteria, I would say, are used to select basically the investment universe for the DMX. So with the DFI, for example, you are looking at market cap, and you are using that factor or that criterion to select the tokens that are included in the index. For DMX, it is a bit more, I would say, actively traded. So there are several considerations here. We need to make sure, first of all, that the tokens that are being considered for investment have been traded for a while, to make sure that there's a track record for that token on the market. Second of all, we need to make sure that these tokens are large enough to, both in terms of market cap and in terms of liquidity. Because it is actively traded, we do not want to be suffering price impact every time we trade. With that said, we basically use these criteria to select a sample universe. And this methodology or this framework can be applied to multiple blockchains or ecosystems. For initially, we applied that on the Ethereum ecosystem, but in future products and future work, we will be applying that same methodology to other ecosystems, including Binance Smart Chain, Solana, so on and so forth. So that's the main criteria which selects the sample universe that we would be able to invest in. Once that's done, we apply the methodology of the DMX, for example, specifically, which is based on momentum. So we calculate price momentum for all of these tokens within our investable universe, and we rank these tokens based on which ones have the highest positive momentum. So which tokens are moving upwards in price at the highest rate. After ranking these tokens, basically these are the top ones basically are the ones that are selected within the index.
So an example of the latest screenshot of what comprises of DMX is available on screen for people who are watching the video. If you're on the podcast, I will include that in the show notes. Adrian, why don't you move on to your next question?
I guess we understood that in a bullish rally, the algorithm will keep selecting the ones with the highest and actually change the constituents. How about the opposite? How does it form in a downtrend? And is there any internal safety mechanism to mitigate losses during a downtrend?
Correct. So the DMX is designed mainly to benefit from bullish trends. The way the indicator is calculated or the selection indicator is calculated is based on these positive price movements. Now, what happens during a bearish trend? The investable universe includes stable coins as well. So that's one internal mechanism that is somewhat of a hedge against bearish markets. So when the market is falling, usually it is very likely that all cryptocurrencies, non-stable coins, will follow that same trend. So when the market is dropping and we are calculating that momentum indicator, we realize that most of these coins have a negative or downward momentum. So what the algorithm does is it will favor stable coins over these other non-stable coins. So with that said, the investments are moved into stable coins, which are relatively stable in value during bearish markets. And we are shifting away from non-stable coins. So in a sense, it's it has an internal hedge against downward movements.
Adrian, why don't you move on to your next question?
Okay, no, once again, this question is just for the people that are new to our Moon token side and really want to try out our DFI and DMX token. So one question I had for new users might be, what's the difference between the mint and the swap option that we can see on our website? And what are the implications?
So the mint functionality is basically creating new coins of that product. So whenever you mint, you are giving in or you are sending the collateral that is required for the ecosystem to issue you a new token. So the minting basically creates new units of that product, whereas the swap, or basically the trading functionality, is when you are buying or selling existing units of the product within a certain pool.
You're on a roll, Adrian. Keep on going.
Thank you. Well, it will be about the underlying constituents. Is there any process for redeeming the underlying constituents? And if so, how does it work?
Yes, there is, in short. So just like there is a minting function where you send in the collateral or the underlying constituents and get a unit of DFI or DMX, the opposite is true as well. So you can basically send back or cash in your DFI or DMX unit for the constituents. The reason why this happens is, first of all, interchangeability of products, so you can easily move between products, and as well as for arbitrage. So the reason why this happens is, or arbitrage happens, is to keep prices in check. So we are keeping the price of the index token, DFI or DMX or any other token, in line with the value of the underlying tokens. So if there is a mispricing, so let's say the price of DMX is trading at a premium compared to the underlying, then someone has an incentive to purchase the underlying, mint a new token, and sell it in the market for the higher price. The same is true for the opposite. So if the DMX token is trading at a discount, you can purchase that token and then cash it in for the underlying, which are in total valued at a premium compared to the discounted index token. So this essentially results in a instantaneous profit. In theory, it is a riskless profit.
All right. Maybe one last question. Maybe what about the future? Any plans of new projects, new underlying indicators, new stress, and what's in for the roadmap?
So within the DeFi space, we are going to be expanding into different ecosystems. So we will be implementing the same methodologies of the current tokens that we have into new ecosystems, as I mentioned, Binance Chain, Solana, Matic, so on and so forth. So we will be creating these native index tokens as well as bridges. We will be trying to bridge between these different ecosystems. So you can basically trade a momentum index token with Ethereum network constituents on Solana, and inversely so as well. For example, like one of the reasons we are doing that is because currently at the moment, the transaction fees on Ethereum are pretty high. So if anyone wants to be actively trading our tokens, our index tokens, it would probably make more sense to be trading them on a much cheaper ecosystem. So until these, layer 2 and all that new technology is implemented and vetted for any risks and issues, that will be one of the solutions we are presenting to our investors. Now, in terms of new products, new strategies, we are, currently in the phase of backtesting new ideas. And once the backtesting process is very rigorous, so that we make sure that our product is robust to different market trends, different, movements in the market, whether it's upwards or downward movements. So once that backtesting is done, we usually invest some of our own money into the product to make sure it's working as expected, and then we would be very happy to release it to our investors.
Adrian, you did mention this is your last question. Is there anything else you wanted to ask or you wanted to add?
No, I think that's it. Thank you so much, Crian.
All right, no problem. Roland, I did have a programming question because, of course, our listeners don't know, but Roland already explained all of this to us last week in a very interesting training session. You showed us the code behind the algorithm, which was in Python 3, and I did a bit of research after that because I'm interested in programming. I've taught Python 3 to young kids here in Taiwan. And are there limitations as far as Python goes when it comes to the algorithm?
So basically, my programming language of choice is Python. That's what I had to learn when I was doing my PhD, and I was exposed to large data sets. So before that, I was basically just an Excel spreadsheet guy. But after realizing that you cannot open a file with more than a couple million observations within Excel, I switched to programming. So Python is a very versatile programming language. It has so many modules and libraries that you can use, out of the box, both in terms of machine learning as well as data wrangling. When I am prototyping some of these products, I typically use Python just because it's super quick, easy to use. After doing the backtesting and the code or the logic is more or less complete, I would then share it, or just, similar to the teach-in session I did with you guys last week, I would typically do the same thing with the engineering team, who would then take that logic and recode it in the native language of the ecosystem that is, that we are basically targeting. So if it's Ethereum, then, they would use Solidity. If it's any other ecosystem, they would use the native language of that ecosystem.
And I mean, in your experience in dealing with engineering, it's fairly easy to move from Python to Solidity or any of the other languages.
Yeah, so Python is one of the easier languages to learn, I would say. I am not too familiar with all of these new programming languages that came about these couple years, especially with the, innovations in the DeFi industry. So that's why you have these, very smart engineers, blockchain enthusiasts who can quickly, understand the Python logic and then start implementing it and backtesting it themselves within the native programming language of the ecosystem they're dealing with.
A last sort of more technical question as well, hardware related. Again, are the DMX or the DFI algorithm limited by hardware, by the speed of rebalancing or purchasing or changing constituents? Is that a limitation at all, or that just doesn't matter?
Definitely, that is a limitation. For example, the DMX token or index token swaps does the swapping based on the indicator, the momentum indicator, on a daily basis, where similarly it also rebalances every 30 days. Ideally, we did some backtesting on a much higher frequency, which also produced some good results in theory when you do not take into account transaction costs. But when you are taking into account these transaction costs, especially on the Ethereum network, these are very significant costs, and they can very quickly eat into your initial investment. So with the backtesting, we showed that the higher or the more frequent you rebalance and swap, the worse the performance of the index token. So we found that sweet spot where we are capturing momentum, investing in these or switching into the tokens that are in that positive upward trend, while still taking into account the negative impact of the transaction fees as well as price impact.
That makes a lot of sense as well. Thanks for answering those two questions. All right, guys. Roland, did you want to add anything about DMX before we move on to talking about the news?
I think it's a pretty robust investment, and it's been at least performing as well as the market from what I see. Obviously, the market has suffered several blows during the past couple of months, with regulatory and interventions and changes that the industry is experiencing at the moment. But so far, I think it's pretty robust. It's doing what it's supposed to do. And yeah, I'm invested in it.
All right, guys. So we're going to move on to the final segment of today. Guys, it's still midday, but it's almost midnight for me. So we're going to try and keep going. All right. So I sent some news a bit late because I always try to get the latest news for you guys, for people who are watching the video or people who are listening to the podcast on Friday, so they can see, okay, this is from Thursday or this is from Wednesday. We're recording the show on Wednesday, August 18th, 2021. And one of the first news, because I just like to get some video usually, is 3 things you need to know about Ethereum. This is from a CNBC video, but basically they're just talking about why Ethereum, maybe regular people have heard about Ethereum recently, why the price has gone up, talking about the burn and that sort of thing. So again, this is totally up to you guys. What do you guys think? I will go Roland first. Roland, what do you think about the price of Ethereum, where it's going? Do you have any thoughts about that? Anything you want to clue people in on?
I mean, I think at this point, for anyone who's involved in the crypto industry, it's everyone understands the pains of dealing with the Ethereum network, especially in terms of costs. The trend now within the network is to move from a proof of work to a proof of stake. And that's not an easy task to do without, obviously, there are so many obstacles and risks involved. So definitely that's a positive thing for the technology, especially because there are so many projects that have already been built on top of Ethereum. So all of these projects will definitely benefit from that move towards a more efficient ecosystem. In terms of price, I don't think anyone can predict prices, or whether, especially in the crypto space, it is hard to value tokens in terms of the intrinsic value, because most of that intrinsic value comes from the technology itself rather than from future cash flows. However, with the shift towards the proof of stake environment, which means that you can basically earn somewhat of a reward for staking your Ethereum, that turns it into a cash flow generating asset. So I'm sure that many traditional finance people, either academics or practitioners, will be applying their cash flow models to value Ethereum as an investable asset. And then based on that, I guess you can more accurately determine what the intrinsic value is. And as we move, more towards decentralized finance rather than centralized exchanges, we will be exposed to much more fundamental information, whether it's hash rates, fund flows on the network, which will be significant determinants of the price of Ethereum or any other cryptocurrency for that matter.
That's such a wonderful explanation. I'm so glad you're on today, Roland, because it's just, you capture a lot of technical details that people have mentioned about on the podcast before that they'd like to hear. Adrian, no problem. Adrian, do you have any thoughts about where Ethereum is going in the future?
No, I would say I totally agree with all the points that Roland just mentioned. I think it's hard to make any price predictions. However, what I can say, we do see a lot of demand for Ethereum at the moment, also from the institutional. We have the burn with a deflationary pressure coming in the future, possibly. And then all the hype around DeFi and especially NFTs at the moment, which are super good to really attract the average on Ethereum, which was not the case with DeFi a lot of times, in my opinion. So I think if we put this all together, there's a huge bullish momentum for Ethereum, and it doesn't seem like to stop anytime soon. So I don't want to give any price predictions, obviously.
I'm going to assume you're finished, Adrian, because you're still sort of cutting in and out. It's okay. We're going to move on to the second piece of news. Roland, this was today's news, of course, August 18th by Mariana Mastrena, published on CoinDesk, if I'm not mistaken. Fidelity's crypto ambitions are bigger than expected. Report: Fidelity says 90% of its biggest clients are interested in accessing Bitcoin and other cryptocurrencies. The firm is now planning to open up the digital asset space to retail investors. If you're American or if you're not American, you've probably seen Fidelity in your city or in your country. They're one of the biggest sort of investment banks in the world. Roland, what do you think about this? Why do you think Fidelity is finally sort of jumping into the space?
Well, obviously, after during, at the start of the pandemic and all throughout the pandemic, the COVID-19 pandemic, we have seen lots of government intervention in terms of printing money and in terms of relief funds. And that printing of money has got many people worried about inflation. So with that said, many investors see Bitcoin as well as other cryptocurrencies as a hedge against inflation because of the limited supply of these cryptocurrencies. So basically, you cannot print new units of a certain cryptocurrency, at least for most of them. With that said, many investors see that as a hedge against inflation, whether it's both institutional or retail investors. And we have seen like a very high increase in demand for these investments like cryptocurrencies, whether it's on centralized cryptocurrency exchanges or whether through your traditional stockbroker. So these large institutions, as you mentioned, big banks, big traditional financial institutions, are realizing the value, the cryptocurrency as an investment, and they are doing whatever it takes now to jump on that train and allow or offer their clientele with investment options. Otherwise, these clients are and will be going to other institutions to enter that market. So you will see, especially now in the coming future, as regulations hopefully start easing and accepting cryptocurrency as a new contender in the investment universe. Once that's done, we will see a much larger influx of institutional players coming into the market to facilitate the movement of funds into the cryptocurrency market, whether it's from other institutional investors or small retail investors.
Very good take. Adrian, what do you think? What's your take on Fidelity?
Once again, I would totally agree with Roland. And as mentioned before, we do see a huge influx of institutional investors and also retail investors. However, I think big corporations, especially big banks, they've been sleeping for years and they always try to bash on Bitcoin and the whole cryptocurrency industry. But after such an increase in demand and all the institutional clients asking to invest in this new asset class, I think now they can't just ignore it anymore and they have to offer something. Otherwise, they're just gonna lose their client base. So yeah, it makes sense from Fidelity's point of view, but on the other side, it was just a matter of time that this will happen.
Thank you for that. All right, guys, we're on to the last point of news, and then I will let you guys get back on with your business day. The last point of news that I'm going to bring up today is, again, this is another article by Emily Mason. It says 24% investment yields, new crypto insurance platform doubles down on DeFi risk. So Ellie was on last week. If you're listening to the podcast, he talked about the Poly hack. The funds have now been returned and the guy's been offered a job. But this talks about how, DeFi is risky. I mean, crypto itself is risky. So Roland, what do you think about insurance? What do you think about the risk in DeFi? What's your opinion? I mean, given your experience.
Well, these attacks, cyber attacks that happen everywhere, whether it's against banks, regular businesses, or even in the crypto space. Obviously, the traditional banking system has, suffered many of these in the past, and they have learned to mitigate against these risks. In the crypto space, these risks come in, or these attacks come in many shapes and forms, which have not been seen in the past. So obviously, whenever something happens, it's completely new within that space, and there is some sort of heightened level of stress among investors, whether that is something that is going to bring down the industry and completely destroy that new technology, or something that can be easily or overcome with time. We've seen these attacks on centralized exchanges in the past. Many exchanges, including one of the largest, Binance, suffered a cyber attack a couple of years ago, where I think 7,000 Bitcoin. Bitcoins were, funneled out of the exchange by hackers. Again, these it might have been something very simple where a phishing email was sent and the funds were then transferred out. In the DeFi space, while these funds are not completely centralized by or controlled by any single entity, a lot of the security ends up based on the code, or it's contingent on the code that is written. So that's why many DeFi projects are open source, so that any developer can look at the code and hopefully contribute to the security of that code and stability of that code rather than try to abuse it. Nevertheless, you always have some of these individuals who will most likely want to take advantage rather than improve the overall progress of the market. In terms of insurance, we have seen the centralized exchanges offer insurance for their investors, for their clients. Binance is one of them. So they have the SAFU scheme. And in terms of the DeFi space, there is definitely some progress that needs to be made and some time for them to catch up. But there will definitely be insurance programs that will be offered either internally within the ecosystem or the project or the code that's being written, or externally as a third-party service. So there might be some new projects that will come along that offer insurance, same as life insurance or any other insurance that you might purchase. So there will be some insurance companies that are specialized in that, where they would audit a certain project and then offer their insurance program as a package deal.
Very interesting. And definitely I can see things going that way. Adrian, your final take for today. What do you think about crypto insurance?
I mean, my opinion is I just really enjoy seeing the blockchain taking over more and more industries, and one of them being the insurance industry. So obviously nothing is perfect, especially when it comes to new and the bleeding edge technology like cryptocurrencies or the blockchain. So it does make sense to have insurance. I think it's just nice. I always say there are no mistakes. We just sometimes fail, but then we learn and we grow. And I think the recent hack is just one of those examples. And we see a lot of different projects popping up from the ground that will just cover such instances. And insurance being one of those. So I think it's just a nice development beside just going for banks or DEXs or whatsoever. And it has huge potential in the future.
Thanks for the final thought of today, Adrian. And Roland and Adrian, thank you very much for joining me again today. I really appreciate the time out of your busy days. You both are super busy people, Roland especially, so I appreciate it. It's been an honor to have you guys here, and I think our listeners are going to really appreciate the takes that Roland has explaining DMX and all the technical details. It's going to keep me awake even though it's like almost 12 a.m. here, because I'm like, oh, this is what Roland said. I got to think about it some more, but it's really cool. So as usual, none of this is financial advice. This is just a disclaimer. You guys heard it before. This is just opinion, something to educate you guys, do your own due diligence. And don't forget to follow us. We've actually shortened Amun tokens to Amun. So we're now at @Amun on social media. Thanks for pointing that out, Adrian, as well. We're also on Discord and Telegram @Amun tokens. We're on Reddit as well. Instagram will be starting up very soon. So if you're looking for information, if you want to chat to any of us, I'm one of the community managers available. Asian time. David, the other guy, he's available European time and American time as well. Between the two of us, we cover things very well. And that's it for today. Don't forget to tune in next week. We'll be interviewing somebody else from Amun, talking about something else interesting, something fantastic. And I hope you guys will tune in. So far, everyone's been listening and enjoying it, so I appreciate it. And again, we will see everyone next week.
Thanks.
Thank you.